Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be considering the S&P 500's possibility of moving higher from the current levels close to 3,150 to almost 5 percentage points higher, that is close to 3,300. And things go well eventually. I am even betting on the S&P 500 establishing a fresh all-time high above its February high of 3,400. But for the time being, right now we are mainly focused on this first target, and I think we can indeed look for some opportunities where we can try to exploit this situation to our advantage. And if things go well, then of course we will be able to make a decent amount of money. If you consider the data docket for the day, we got inflation numbers. We got the inflation rate for United Kingdom as well, and then later on we got the final readings for the inflation rate for Euro area as a whole. And as expected, we have got this reading of 0.1%. So you can say that it is just little bit above the deflationary scenario, and though the economy is opening up, but we are not likely to see the revival of the demand anytime soon. So because of that, the inflation rate is likely to prevail at the current levels, or even it might even go below the current levels in coming months. So we need to watch out how the inflation dynamics work out. And of course, it is going to be worrisome for the European Central Bank to try to get the inflation back to its prior levels, but that is not going to happen unless and until we see the economic revival and the demand for the goods and services picking up. We also are scheduled to get very shortly the Canadian inflation rate, and I think uh, compared to the deflationary reading of minus 0.2% in terms of year on year, which we got for the month of April, we might see almost a flat reading for the month of May. And of course, it is broadly in line with what we are seeing in the other major economies of the G7 blocks. Later in the day, those who trade in commodities, the crude oil in particular, will need to watch out for the crude oil inventory data. And here we can expect the addition, and the addition of the inventory is not going to be as much as it used to be just a month back. As more and more parts of the economies are opening up, we will see lessening of the crude oil stockpiling, and of course that is likely to help the ongoing recovery in the crude oil prices to continue for at least next couple of trading session or even more than that. A lot is going to depend on the economic activity in the many of the countries around the world. Moving on to the technical segment, here we will cover the S&P 500 and the Euro USD. Let's start with the S&P 500's technical outlook first. This is the daily time frame chart, and here we are looking at the possibility of S&P 500 reversing its course closer to 2950 and going back towards 3300 zone. As you can see, this turnaround has been pretty sharp. We had this sharp fall in the last week from levels close to 3200 to almost 3000 and even below that, but then in last two trading sessions starting from Monday, we have seen this robust turnaround in the sentiments, and the gains are there for all of us to see, and these gains are not evaporating per se, and these have been pretty steady move on the upside, and I think that gives us more confidence to be optimistic about the scenario of S&P 500 continuing to move its upward, continuing in its journey upward, and this rally, which started actually closer to 2200, is likely to last some more time. And if it eventually goes on to cross even 3300, then you can calculate, even back of the envelope calculation will give you a 50% rise from the lows established in the month of March, and that's a remarkable rally. The 50% rally in just little more than or just over 3 months. So I think this is once in a while, once in a century phenomena, you can say. And now for last two trading session, we are seeing S&P 500 actually entering into consolidation zone, and it hasn't really been able to breach this first resistance of this month's pivot point series. We saw this support being coming into play around this first uh, not first, there is the central point of this month's pivot point series, and here after due consolidation, the revival happened from the levels close to 2950, and now, as I said, we are almost 6 percentage point higher from those levels. But even from the current levels, I think the uptick is pretty much visible, and we can be more hopeful of this rally continuing on the higher side. Of course, it might spend some more time in this consolidation phase, and then eventually, as and when we will get a break above this first resistance, then I think the pace at which we are seeing these gains, even picking up further, and that opens up a possibility for us to get involved on the long side and see where actually we can get involved and try to minimize our risk, whereas we will be looking at the probability of maximizing our profit, and for that we will need to rely on this confluence of 50 and 100 SMA area. In yesterday's session we had considered the Nasdaq, and as expected, as anticipated, Nasdaq did rebounded closer to 9,800, and that was the area of interest for us. In yesterday's session I had said that that should be the price zone to watch out for, and as expected, it really happened, and then now it is about 10,000 again, and it is likely to move towards our target of 10,200. And a similar scenario is also unfolding in the S&P 500, and as you can see, this prior swing high area as well as this 100 SMA did provide some support on the lower side to the S&P 500, and for the day the S&P 500 is holding above this 200 SMA zone, and I think we can pretty much expect it to try to retest its immediate swing high if it is able to hold above this confluence zone. And for that matter, I think if we get fortunate enough, and if we get a fresh break, uh, fresh entry point anywhere close to 3070, that is its immediate support zone, then that is going to increase our profitability, and of course the probability as well, and the risk reward ratio would be a lot better. But we can't really say if that is going to happen or not. We have already seen this revival happening to the closer to the same level, so now it is going to be fairly difficult to expect the same kind of scenario again playing out. But you never say never, and if suppose if you get fortunate enough, if you get a fresh entry closer to its immediate swing low, and of course the support of 100 SMA, then that would be an fabulous development. And as I said, the basic thing it will do is reduce our risk and maximize our profit. If we are going to get involved anywhere close to 3070, then I think a stop loss of 3030 or 3000 3000 not 30, 3020 to 3000 area should be good enough to utilize as a stop loss. But now if we are going to go for a market open trade, then of course the risk is going to be a lot higher. 4 to 5 percentage point risk I don't really think is reasonable to take at this point in time. So what we can do is one more thing, that we allow the consolidation to go on for some more time, and we allow the 50 SMA line which is there around now 3094 to catch up with the price action, and eventually we can think about getting involved on the fresh long positioning. Otherwise, the next best course of action is going to wait out for the S&P 500 to correct from the current levels and go closer to its support zone. And then from those levels, as I said, the risk reward ratio would be in our favor, and we will be able to target this prior swing high, and even beyond that, as our title is suggesting, we are anticipating the levels close to 3300 to be reached eventually. Moving on to the Euro USD, Euro USD has now entered into a bearish phase again. And in one of our webinars just a couple of days back, we had indeed considered this possibility of Euro USD going in a bearish phase and continue to move on the lower side. And for last two trading sessions, we are seeing that is how it is unfolding. Now, coming to the daily time frame chart, here we have this consolidation going on in the S&P 500, and as you can notice, we have already seen this substantial rally, just starting from just below 1.08 zone to almost above 1.14, and now if this correction which is ongoing, if it even extends toward this 38.2% Fibonacci retracement of its prior rally, then I think that should not be something to worry about. And from daily time frame perspective, it might be even considered as a fresh opportunity to go long in the Euro USD, and even I am expecting the current fall, the ongoing fall in the Euro USD to continue for a while, and these levels close to 1.115 can be expected to be reached in next few trading sessions. But if that is going to happen, our job is to look for opportunities where we can indeed think about getting involved. And I think this first resistance of these month's pivot point series can come pretty handy. So here we have tried this break below this immediate support zone, which was actually prior resistance, then it gave way, and we had this fresh rally continuing towards 1.14. Now some corrective momentum is setting in, and we have already seen this corrective phase here. And of course, on the lower side, the Euro USD has found support closer to 1.125 zone as well. But in today's session, after briefly rising closer to 1.13, again we are seeing Euro USD is facing selling pressure, and if we see that on the sustained basis, if the price action continues to hover below this first resistance of this month's pivot point series, then that is going to open up the possibility of Euro USD moving lower, and our initial target will be closer to 1.115, which is also our 38.2% Fibonacci retracement zone for its rally of almost more than 600 pips. Coming to the 1 hourly chart, I think any short selling opportunity closer to 1.13 should be lapped up, and that's what has happened. Even in a couple of sessions back when we had considered the Euro USD, I was talking about getting involved on the sell side closer to 1.13 with a stop loss being just little above its immediate swing high, which was there around 1.134. But I think unfortunately that trade might have closed in loss. But after closing in loss, from those levels exactly we saw fresh selling momentum coming in, and now in a today's trading session also a fresh opportunity had arisen to look for short selling closer to this resistance zone of confluence of 50 SMA and 100 SMA. So here again in today's trading session, 1.13 zone can be utilized as a crucial marker. Below that, we continue to look for selling opportunities. Above that, we simply decide to sit on the sidelines. We won't really be looking for fresh opportunities on the long side. Our intent is to look for short selling opportunities on the Euro USD, and for that, I think the best place to get involved is going to be this confluence zone, and even the 200 SMA zone is not far away. So suppose if we are going to go for a short sell anywhere close to 1.13 zone, then I think stop loss of closer to the level of 1.134 should be good enough. So again, as you can say, that risk reward ratio is going to remain kind of extended. We are taking a risk of around 40 to 50 pips, and then on the lower side we are banking on the possibility of fall being extended towards the 1.12 area. So that's it from my side for today's trading session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.